Hi CA students, let's revise CA final AFM study material problems. So first we'll go with chapter 1, financial policy and corporate strategy. Let's read the question once. So they've given Sunday Limited balance sheet as on 31st March 2023 and sales for the year 6,000 lakhs and sales are expected to grow by 20% and profit margin 4%, dividend payout ratio 50%, and some ratios to calculate the funding requirements. So the requirements of question are external fund requirement EFR and then amount to be raised from short term, long term and new equity. First let's see the external fund requirement. So conceptually going, the previous sales was 6,000 lakhs which was made through the current assets of 14,000 lakhs and liabilities of 14,000 lakhs. So if the sales are going to increase, then the capacity also should increase ideally. So the growth percentage is 20%. To meet the 20% growth, so the increase in assets will be 2,800 as shown here. So the total assets, current assets are 14,000 and then for the current 6,000 sales. So the increase in sales will be, as they've told, 20%, which is coming up to 1,200. So 14,000 divided by 6,000 into 1,200, we are getting 2,800 as the additional requirement for capacity. So this much funds will be required. Then we'll be saving something also via current liabilities. Why? Because if there is an increase in sale, we require raw materials which we will purchase from our creditors, wherein our creditors also will give some credit, right? So the current payables and provisions are 2,000 for the sale of 6,000 into the increased sale, so which is coming around 400, which is our current savings now. And as they've given the dividend payout ratio is around 50%, the rest 50% will be retained as retained earnings, right? So that much also we don't require funds. So the projected sales are coming up to 7,200, which is 6,000 plus the 20%, right? And profit margin they have given us 4% in the question, which is coming up to 288. So 50% will be paid as dividend, 144 lakhs. So the balance 144 lakhs will be retained as reserves, retained earnings. So the total fund requirements will be the increase in asset 2,800 reduced by our savings 400 reduced by our retained earnings 144. So the net requirement will be 2,256 lakhs. This will be our external fund requirement. So ICAI has given some formulas. The logic is same. We can use the formulas also, or we can just go with the concepts. Now coming up next, the amount to be raised from short term and long term funds and issue of new equity. Now we know 2,256 is the total fund requirement, external fund requirement. We'll see how much is required from short term, long term and new equity. For that they've given some ratios. So with the projected sales, this much ratios has to be maintained. First, first short term funds, they've given sales to short term loan and payable will be 4.4:3. So the increased sales is 7,200 and the 7200 divided by 4 into 3, we will get 5400 as the short term loans and payables. This much has to be maintained. The current short term loans and payables are 3000 is the payables and provision. Since, as previously discussed, if there is an increase in current assets, then to that extent current liabilities also will increase. So 2000 into 1 that 20 percentage. So the current short term loans and payables will be 5400. Since it meets with the 4:3 ratio, there is no short term funds required in the current case. With the existing short term loans, like with the existing short term funds only, we can make this much sales. Coming up to next, amount to be raised through long term funds, wherein they have given fixed assets to long term loans will be 1.5 times. So the new fixed assets will be 6000 plus the 20 percentage, which is the say growth, so 7200, and the new long term fund should be 4800, which is fixed assets divided by that 1.5 times. Now the existing long term funds as given in the question is 4800, sorry 4000. So the amount that has to be raised will be 800 via long term funds. Now as we know short term and long term, the rest will be equity, right? So the total amount to be raised will be 2256, and the amount to be raised through short term funds is 0, long term funds is 800, the rest will be new equity, which is coming up to 1456 lakhs.